Welcome to Pro Webcast News, where we bring you daily industry updates. Today is Thursday, August 27th, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by Covenant Reliance Producers. We build success stories. For more information, please visit www.crproducers.com. Now for today's headlines. The number of problem banks in the U.S. climbed drastically to 416 during the second quarter of 2009, from 305 the prior quarter, according to the Federal Deposit Insurance Corp., or FDIC. The FDIC said that overall, the industry suffered a $3.7 billion quarterly loss, after reporting a profit of $7.6 billion during the first quarter. Yet despite the decline, FDIC Chairman Sheila Barr noted signs of economic revival, saying, quote, "While challenges remain, evidence is building that the U.S. economy is starting to grow again. Banking industry performance is, as always, a lagging indicator," unquote. Finally, 81 banks have been closed by regulators so far this year, after just 25 were closed in 2008, and only 3 were shuttered in 2007. In related news, the FDIC also announced this week that the insurance fund fell 20% to $10.4 billion during the second quarter. Asked about the possibility of borrowing money from the Treasury Department to help shore up the fund, Chairman Sheila Barr said that would not be the strategy at this time. The more than 8,000 federally insured banks and thrifts set aside $66.9 billion during the period to insure against possible losses, up from $60.9 billion for the same period in 2008. The FDIC's insurance fund has been battered by the calamitous events of the past few years, namely collapsing financial institutions. In fact, some analysts have warned that the fund could fall into the red by the end of 2009, an event that has only happened once before, during the savings and loan crisis of the 1990s. In economic news, the U.S. economy shrank at a 1% rate during the second quarter, less than expected by many analysts. According to the Commerce Department, U.S. gross domestic product beat analysts' expectations of a 1.5% decline, helped by smaller declines in consumer spending and exports. The numbers marked the 4th consecutive monthly decline, the first time this has happened since the U.S. government began keeping records in the late 1940s. I'm Paul Wilson, and thanks for watching Pro Webcast News. For more in-depth news and features, visit www.producersweb.com.